Hey everyone, welcome to the KE Report and a company update from Heliostar Metals, chatting with the president and CEO Charles Funk. Charles and I will be recapping a recent technical report at the La Colorada project and some drill results. Again, very high grade, impressive drill results from the Ana Paula project, as well as the growth of that drill program. Heliostar Metals is traded on the TSX Venture Exchange under the symbol HSTR, on the OTCQX under the symbol HSTXF, and the Frankfurt Exchange RGG1. Charles, as I mentioned, let's start off with this technical report from the La Colorada mine. Really, what I want to focus on here is the upside case. You put the base case at $2,300 gold, the upside case at $3,500 gold. With that upside base case, you're seeing a post-tax NPV of $243 million. That's US. An IRR of 168%. You outline a payback multiple of 8.4 here. Take us through this technical report. What do you think the market needs to focus on looking at this La Colorada project?
Yeah, they're a great set of numbers. I think there's two things that I think are really meaningful out of it. Remember when we talked about La Colorada, we'd always talked about there's a number of things we can do to extend the mine life and to maximize value. Now we've got the plan, so there's no more guessing, there's no more optionality. This is our plan for La Colorada. So it becomes very easy then to model our costs and our cash flow. And if you look at it that, at that upside case, which is still $700 below the gold price, it was an incredible gold week for the gold price last week. That's two-thirds of our company's market cap in just the NPV of La Colorada, let alone the cash flow from San Augustine, let alone Ana Paula coming down the line. So I think it really demonstrates a really robust project at La Colorada that makes money at all points of the cycle. It's a $1,626 all-in sustaining cost. So a high margin project that's been an incredible turnaround from care and maintenance to our plan for the asset over the next 6 and a bit years.
So, Charles, you outlined that this all encompasses about 286,000 ounces of gold produced over a just over 6 year mine life, capex being $45 million US. There any chance that you could or would speed that up, grow the production per year profile?
So, yes, you could technically speed it up, but you would be borrowing large amounts of money to change the order of the pits. So, what we've done is this is the quickest way that we can do it with organically funding it from stockpile production and San Augustine. So, this sequence makes the most sense to maximize cash flow for the minimum expenditure before we pull the trigger on Ana Paula. That's why we've sequenced it in this order.
So what about expanding on the resource? You mentioned this Veta Madre Plus area that could increase the ounces. Not a huge amount, but still could increase the ounces. What does the expansion potential look like?
Yeah, so there was a section of Veta Madre that is indicated, but we decided that we needed a bit more confirmation drilling before we were prepared to put it in the reserve. It's another 28,000 ounces. I prefer to think about it as probably in the order of another $30 million in cash flow from a larger pit. So we'll have the rigs turning there next week, looking to just confirm that the resource supports that bigger pit shell, a little bit more geotech work on the bigger pit shell, and we would move to a bigger Veta Madre, which would make more money in the same period of time. So we think that's one of three really good opportunities that are coming on the back of this study.
What are the other good opportunities that are coming on the back of this study then?
The other opportunity is we added over 60,000 ounces to the resource with the drill program that we did, but we didn't capture as many of them in the reserve at Creston as we would have liked because we identified a fault that meant we had to be a bit more conservative in our pit wall angles. At a higher gold price, we might be able to expand the pit and bring those ounces in. So that's a second opportunity. And the third one's the upside. These resources are open at depth. There's some really high grade hits underneath the pits that we've drilled this year, and there's really compelling exploration targets outside of it. So now that we've bedded down production and demonstrated the economics of that production, we can look forward to resource growth and exploration growth, initially at Veta Madre, potentially at Creston, and some really exciting exploration targets going forward.
Is that all happening now or in the near term, the drilling that's at La Colorada?
Yeah, so for the next couple of months, it'll be on the Veta Madre Plus to bring in that, and then we'll look to exploration. So early next year, let's say we start to look at some of the exploration targets above and beyond the immediate resource growth.
Now, when it comes to really building this thing, whether it's the larger pit or the pit that's simply within this tech report, when does that all come to a point where you put some shovels in the ground, actually start building it?
Yeah, so we need two steps, which the first we've achieved. We received permits in August and September that allow us to expand the leach pad capacity at La Colorada. We need a second permit, which is the expansion of the Veta Madre pit. That's the exact same permit that we got in Durango in late July. So we expect to have that by the end of this year, early next year. The plan is to produce from stockpiles before then, but should we get that permit quicker? At the moment, in the study, we forecast production from Veta Madre in 2027. I think there's a decent chance we might be able to bring that forward and displace lower economic ounces with more economic ounces.
Okay. And again, funding this, you're planning on doing it all just from existing cash flow.
Correct. So, that's the power of what the combination of this gold price. If you're a steady state producer, you're going to make a lot of money in this cycle and have the same business at the back end. If you're not in production, you've still got to take a lot of dilution to get into production. Companies like Heliostar are really uniquely placed in this market, in my opinion, in that we have the potential to move by an order of magnitude our production scale for the same share count or materially the same share count. And so I think companies that are in production and growing are uniquely better positioned to maximize value per share from this cycle than any other company.
Well, yeah, and it's growth too, right? You're looking at growing overall production here, which actually ties into the other news I want to talk about. That's Ana Paula drill results, part of a 15,000-meter program, infill, more conversion program here. I always chuckle at some of the results you get out of Ana Paula, and the headline number from the October 6th news release is another example of those. You have over 88 meters grading almost 9 grams per ton gold from 88 meters down hole. Just a crazy hole here. But look, a lot of this is all within block models that you are working to de-risk. It sounds like you're even hitting better grades in some areas than you thought. So talk us through those results from October 6th, please.
Yeah, I'll frame it in the big picture and then come in. So, this quarter is a particularly exciting quarter for us because we have three big deliverables. We've just delivered the La Colorada Technical Report. We've decided that we're going to put out a PEA on Ana Paula to show the economics of our underground approach. And then we have the PFS for Serra de Gaia, which we're getting very little value for because we've treated it as historic, just from a bandwidth perspective until we get this study out. So there's three big steps showing increase in value in our company. And I'd argue you could go a lot of the way to supporting our valuation just on what we put out last week with La Colorada. The next one will be the PEA study at Ana Paula. And that's going to include inferred resources because before we were in production, we didn't have the balance sheet to drill them off the way we wanted to. And what you've just referred to is that 15,000-meter program. We might expand it. We've added a third rig right now. We want to convert those into measured and indicated for the feasibility study late next year or early 27. So we're doing that conversion program so they make it into our full mine plan, but we'll be able to show this quarter the economics of what those kind of hits are. And as all infill drilling, sometimes you add ounces, sometimes you grow boundaries, sometimes you tighten boundaries. But that hole there was a material improvement on the grade than we expected. So if we keep doing that, we'd look to be able to add more ounces to the mine plan and therefore be able to either extend the mine life or show better economics depending on which way it falls.
All right, just remind everybody again how many ounces you're converting here and how many meters do you think are needed for that full conversion?
Yeah, so right now we have a resource at Ana Paula of 710,000 measured and indicated ounces and just under 450 inferred ounces. We would like to be able to add those numbers together, which we think we'll be able to do on the back of this 15,000 meter drill program that we have underway at the moment. We're targeting 10 years at 100,000 ounces in that feasibility study. We think Ana Paula has material potential to grow beyond that, but that's what we'd like to have for the feasibility study.
All right, there's something else that you mentioned in that news release that I just want to maybe push on you a little bit there, where you said that you're intending to make a construction decision for Ana Paula on the back of the feasibility study that would allow you to have the mine in production at that 100,000 ounces a year in 2028. Charles, is there even much of a decision to make here with the numbers you're generating from some of the other assets, just like that technical report and some of the grades that you're seeing within this drilling?
We think Ana Paula has the potential to be not just lowest quartile, but lowest decile, in the lowest 10% of companies for all-in sustaining cost, making it one of the highest margin mines in the world. We think we can make more money at a 100,000 ounce a year run rate than most 200,000 ounce a year production mines. And so obviously, from an economic perspective, if we deliver that, it's a no-brainer to build the mine. Yes, we formally have to go through the processes to make those steps, but we are moving as rapidly as we can to have completed all the work we need to do sensibly, to have the studies in place to borrow the money that we'll need to have the permit modifications in place. So we're doing things like we plan to push the decline at Ana Paula down next year. So we'll do everything we can to speed up that process. And because we have cash flow, we can make longer dated decisions than we could have made if we didn't have it. So yes, there will be a formal construction decision. No, if I'm honest, I don't think it'll be a difficult conversation.
So then why get the PEA out? It sounds like within that news release, you're looking at a feasibility study. Yes, but the PEA this quarter, what's that going to be used for?
Yeah, good question. So originally we weren't planning to do this. We were just going to say, unusual project history in the fact that it had a PFS on an open pit. We took it to an underground resource and we're moving on to the FS. And so the risk in a PEA is there's been a history of PEAs that are promotional, that are designed to maximize value with no intention of building a project. And so, as we talked to shareholders at the beginning of this year, some of the feedback that we got is, we'd love to not have to guess. We'd love to see the economics of the plan as you plan to build it. And it turns out with our sort of scoping study ahead of the FS, we'd done 90% of the work that was required for a PEA. So it's not a lot of extra work. It's very little extra work for us as a company. And it gives the market clear visibility. If we convert the inferred to M&I that we're doing at the moment, what the economics will be. And we're quite confident in our costs and in our CapEx numbers that will come out in the PEA because you're going to see them in an FS 12 months or 15 months later.
Okay, interesting. Hey, it all makes sense, right? You're obviously very confident that the numbers are going to be good, so might as well get economics out to the market sooner rather than later. Look, I know it's still a little while since we'll get the Q3 results, but in terms of cash in the bank to move forward with all this drilling and the ongoing mining that you have, where does the company stand capital-wise?
So we were at $30 million at the end of the second quarter. We'll put our Q3 financials out on November 20th. We're in a very heavy spend phase, but we'll still lift our cash balance when we make that update. So we're making good money at the moment. We're spending in four key areas right now, or we plan to spend in four key areas. We're spending $9.5 million US at Ana Paula, mostly on drilling in the second half of the year. We're spending $10 million on the restart. So that's the CapEx plus the time for the gold to come through the leach pad at San Augustine. We're going to early next year build the leach pad expansion at La Colorada. And I suspect we'll be bringing forward Veta Madre. So I think we got making good money with four big spends that will truly mean by the back end of next year that will truly be free cash flow positive and building cash up for Ana Paula. But despite all that, I expect our cash balance to lift in the Q3 update from the Q2 update of $30 million.
All right, thanks for that update, Charles. One more kind of broad question where, look, we're clearly in this environment of escalating gold prices, silver prices, metals prices broadly. Yeah, we had a little correction at the end of last week, but look, a lot of projects make sense at these higher gold numbers, especially if we were to go through a slow period in terms of gold prices, maybe even a correction, are there any lower number gold prices that would cause you to maybe put some of these projects on a bit slower pathway?
I think that's what different, there's a lot of, when we were building these asset bases, we wanted high margin projects. And I think, and it was an unpopular thing to want to be a producer. Now everyone seems to want to be a producer. It seems a very crowded trade at the moment. And you're seeing a lot of companies with $2,500 to $3,000 all-in sustaining costs that will be particularly sensitive to pullbacks in the gold price. Although I know gold went up net about $200 last week, so we can't be too short-term in our focus. What separates us, our Q2 AISC was sub $1,600 an ounce. Tech study just for the Colorada is 1626 an ounce. We think we'll be able to, get around a $1,000 all-in sustaining cost for Ana Paula. So we think our assets are uniquely armored against any gold price, meaning that they make more money in these high gold price environments. And it doesn't mean we have to change our plan substantially if there's a material correction in the near term.
Okay. Charles, just a quick little recap then. News flow wise, look, you've mentioned a lot of different projects here. We've gone over just a couple of news releases, but a lot in those news releases. What does the news flow look like? Summarize it for us, maybe through the end of this year.
Yeah, I'll keep it really simple. It's a big quarter for news flow for us, and it works at three levels. So on November 20th, it'll be our Q3 production numbers and financials on the back of that. Q3 was a good quarter for us. We expected it and forecasted to be better than our Q2. And so that shows the cash flow generation from our assets and our steady state business. Above and beyond that was these three big studies. We've just talked about the Colorada Tech report that came out last week, a PEA from Ana Paula to follow, and a PFS from Cerro de Gallo, all this quarter that I think will clearly beat analyst consensus forecast for the valuation of our company. And then on top of that, we're drilling at Ana Paula, we're drilling at San Augustine, we're drilling at La Colorada. We get lots of good news flow to come, like the 88 meters at 8.8 grams we just talked about. So three levels of news and a lot of news that I think by the end of the year demonstrates a much more valuable Heliostar.
All right, Charles, thank you very much for this update. Again, Charles Funk, President and CEO of Heliostar Metals. Click the link in the show notes to read over the news that we discussed and send me any questions you have for Charles. Charles, I'll be following up with you at the latest when those Q3 results come out. So thanks for your time and keep us up to date on future news.
Thank you.